Hey everyone. Let's see. Hi everyone, this is Rich, and welcome to our journal entry series. Today we're going to be looking at landlord accounting for tenant security deposits. Okay, the journal entries that we're going to be looking at are security deposit receipts, including reclass from a long-term to a current liability. We're going to be looking at a security deposit refund with interest. And we're going to be looking at security deposit forfeitures for failure to pay rent and the incursion of damages. Some quick details are security deposit will be $10,000, monthly rent is $5,000, damages are $3,000. We'll also assume a 5-year lease, and we'll assume $100 of interest. Okay, we're going to move to our QuickBooks online account. And we're going to start by going into Accountant Tools, Journal Entries. Okay. In most jurisdictions, security deposits will be held in a separate trust account. So we have one created in our chart of accounts. We're going to debit $10,000 for the receipt of that cash. We'll put in a description that is appropriate for this transaction. I'll do it this one time, and then we'll just assume it going forward. So this will be just security deposit for simplicity. Name will be Tenant 1. The property will be Plaza 1, Unit 1, and our class will be it is a retail location. Okay, since this deposit is since the lease term is 5 years, the deposit will be long term. So we have two security deposit accounts, one that's current, one that's long term. We'll select long term, and we'll just copy this for future journal entries. Tenant 1, Plaza 1, Unit 1, and retail. Okay. After each journal entry, we're going to check our financial statements to look at the impact and make sure that we didn't make any mistakes. So look at our standard report. We have our profit and loss. Normally you're going to look at your current period or the current year, but just for speed, I'm just going to select all dates, run the report, and as expected, we don't see anything since a security deposit does not have a P&L impact. Going back to our standard reports, we'll next look at the balance sheet. Here's where we're going to start to expect activity. We run this report. Again, just picking all dates for speed. We see our trust account has $10,000 in it, and our long-term liabilities have $10,000. And finally, we will take a look at our cash flow statement, where we'll see $10,000 from financing activities. Okay, going back to our journal entries. Okay, the next entry will be that interest. All right, so the next entry will be interest earned on the security deposit. So normally what will happen is the trust account will be hooked to a bank feed, and you'll categorize it. We're just going to do the actual manual journal entry so you could see that. So this money is going to go into the trust account. So we have a debit of $100 for interest. Again, put in the description that works for you. For the Tenant 1, Unit 1, and retail. And then we have interest income, but this one is interest income for trust accounts. Right? So it's not interest income earned by our company through our operations or through our investing activities. So we select trust account, $100. We select the tenant. We select the unit and retail. We're going to then look at how this impacts the financials. Okay. First, starting with the P&L. Okay, we're going to run this report. And we see $100 of non-operating income. Now, keep in mind, we did not earn this $100. So we have to complete this journal entry with a second entry, but I just want to show you how it first impacts the financials. Okay, next we're going to look at the balance sheet. select all dates. The trust account now has $10,100 in it. That's correct. The security deposit was $10,000, and we have net income again, which is not our income, of $100. And we're now going to move that. We go back to journal entries. So what we have to do is we have to select our interest expense for the trust account of $100. You put in the description. We have our tenant, our property, and our class. And now what we need to do is go into that long-term liability and move the balance to the customer's deposit account. Save and close. And we got our order warning. We forgot to add our name and our class. It's always good when you're setting up your preferences to ask for a warning so you don't miss it, which I would have. Okay, and we save and close. Going back to our financial statements, we look at our P&L. We select all time. And now we have zero net income, which is great. We didn't earn this $100. We don't want to be taxed on it. So this entry that we just made zeroes out our income. We'll then go look at our balance sheet. Okay, on the balance sheet, we're going to see $10,100 in the bank account, and we're going to see that the total amount we owe to the tenant is $10,100, and our net income is zeroed out. So everything at this point is looking really good. Okay, now let's assume we are going to refund. Okay, so now we're going to assume we're going to give a refund to the tenant. Their 5-year lease term has expired. Everything went well. They were current on their rent. There weren't any damages, so a full refund will be granted. We'll go to the journal entries. Oops. All right. We're going to cancel out the full refund when we edit, and we're going to do this next piece because I forgot to do the reclass, which we'll do now. Okay, after we get all of the... Okay, the next thing we're going to do is we're going to reclass from a long-term to a current liability. This happens when there's 12 months left in the lease term. So going to our journal entries, we are going to debit our long-term security deposits, which will clear them from the balance sheet. That balance is now $10,100. The $10,000 they deposited plus the $100 of interest that we owe to them. Again, you put in your description as always. We have our tenant, we have our unit, we have our class. And again, these are completely optional. Your name will always be the tenant, and then the property, you can create anything you like. Same with class. I just did this for illustrative purposes. It's very easy to follow, and it does provide some really good reporting. And we're going to move that to our current security deposits. Okay. And as retail, so we're going to save and close that. And we're going to look at our financials. So we're going to start with our P&L. No impact is what we would expect to see. We're just going to see the $100 in and the $100 out. Perfect. No net income. Okay. We're then going to go to our balance sheet. Okay. Here we're going to expect some activity. Okay. We have our $10,100 in the trust account. Great. We now have a current liability of $10,100, and we no longer have long-term liabilities, and our net income is zero. And finally, the cash flow statement. This was a reclass. It was non-cash transaction, so we shouldn't expect to see anything here. And perfect. We still have our $10,100. Okay. we do have a video on how cash flow statements work. We'll explain the difference between operating activities, investing activities, and financing activities. So definitely check that video out. Okay, we're going to close out of this. Okay, now we're going to actually return the money. Okay, so 5 years is up. The tenant has paid all of their rent. There are no damages. They're going to get a refund of the full amount. So here we're going to clear our security deposit. So we have our tenant security deposit, which is our in the current liabilities. That's $10,100. Put in your description. We'll get a name in here. We'll get a property. And we'll get a class. And then this will be our trust cash account. All right. And close that. All right, we'll now move to our financial statements. So we'll go back to our reports, our standard reports, which we're already in. We'll click on profit and loss. Quickly bring up the totals. Again, this is a cash flow transaction, so we're not going to see anything on the P&L. Looks good. We'll then go to the balance sheet. Okay, we'll run our report. So here we should now see our balance sheet completely cleared out. We no longer have any cash. We no longer have any current or long-term liabilities. Everything looks good. And finally, we'll look at the cash flow statement. Okay, and we don't have any activity. Perfect. Okay. Now let's assume the client has to forfeit their security deposit. So just to make everything work, the first thing I'm going to do is just go and delete the last journal entry because I want to put the balance back on the balance sheet. Just delete that really quick. Okay, we'll look at the balance sheet, make sure everything looks good, and we'll run that. Okay, so they have this $10,100 still on our balance sheet, and they did not pay their rent, and they incurred some damages. Fortunately, our security deposit is in place for these things, so we're going to make sure that our rent is paid. We're going to make sure our damages are covered, and then because the security deposit is not our money, we will have to refund the balance. So we're going to look at rental income of $5,000 for the last month they didn't pay, the $3,000 for damages. That's $8,000 we're going to keep, and that's $2,100 we're going to have to give back. So we go to our journal entries. Okay. We know that this transaction is going to completely clear the liability. So we're going to go to our security deposit, and we're going to debit $10,100. Okay. We're going to select all of our classes. Okay. So now we have some rental income. Okay. That's a credit of $5,000. And again, we'll just set up our filters, or I'm sorry, we'll set up our classes. Okay. Now we have reimbursable income for damages. Okay, that's $3,000. Okay. Again, this isn't a profit center P&L account. Another option you could have used was to reduce an expense for repairs, but I have it set up to be reimbursable income of $3,000. Okay. And finally, we are going to give the client back $2,100. $2,100. Okay. And here. Okay. And that is going to be from the trust account. Okay. Now there's going to be another step we're going to have to take, but we're just going to do that in a moment because I want to show you something. So we're going to save this. So we are going to clear the liability. We're going to recognize revenue. We're going to cover our damages. And we're going to give them back $2,100. Okay. So quickly, we're going to go to the P&L. Look at all dates. We see rental income of $5,000, reimbursable income of $3,000. That gives us total revenues of $8,000. We had this interest income which zeroed out, so we have $8,000 of net income. Okay. We're going to look at the balance sheet. And there's still one item we have to address. So the $8,000 of cash is still sitting in the trust account. So we got to make a journal entry for that. The $2,100 has gone back to the customer. And we're going to go to the cash flow statement. And here we're actually going to see net income of $8,000. And we have cash of $8,000. Our final journal entry is going to be a compound journal entry to move the cash from the tenant's trust account to our operating account and to pay for the repairs. So we're going to go back into journal entries. We are going to now debit our operating account for the $8,000. Okay. And then we are going to credit their trust account for the $8,000. Then we are going to take care of the repairs. Okay, so we have a repair expense of $3,000. And if we've already paid them, we could credit our cash account or an accounts payable. And we'll just call this cash. We paid them in cash. So contractor came in, fixed it, they've been paid. And this should complete all of the entries needed in taking a tenant security deposit, paying them interest, refunding them, and forfeiting if something activity warrants it. So let's finish this up by looking at our reports. Here's our standard reports. Let's look at our P&L. Okay, so for the P&L, we had our $8,000 of income. We had our operating income of $5,000. We had our reimbursable income of $3,000. We had our repairs expense of $3,000, and then we had some interest, which canceled itself out. So a net income of $5,000. We'll then look at the balance sheet. Okay. On the balance sheet, we have cash in the bank and net income of $5,000. Perfect. And then finally, we have cash flow statement. And cash flow statements shows net income from operations and no activity from financing or investing activities. And that will complete this demo on how to account for security deposits as a landlord. Hope you enjoyed it. Definitely check out our video library for more tutorials. And if there's anything you'd like to see, please put that in the comments. Have a great day, everybody, and take care. Bye.